In this video, I will discuss Q4 FY25 result and Concall of Ashapuri Gold Ornament. So Ashapuri is a Ahmedabad-based B2B jewelry manufacturer, just like Sky Gold, and in total they have 1.5 ton per annum manufacturing capacity. But for now, they are using 500 kg per year capacity. Okay, but if required, they can go up to 1 ton per kg in just 2-3 weeks. They have the floors for the manufacturing area, and they just have to develop that floor, and they are good to go for 1 ton 1.5 ton per year capacity. Okay, and if I talk about their customers, they have Kullan in them, Malabar and Senko. It is their customer base and big customer base for say. I think Titan also gave some order to them in last quarter, if I am not wrong. Okay, and their top 10 customers contributes 48% to their overall revenue. Okay, so they are fairly distributed, they are fairly diversified in terms of the revenue from top 10. They also have R&D facility, they have dedicated team for R&D also, so that is a really good thing. That if we see Ashapuri Gold is a very small compared to others. Okay, very small company, very small manufacturer, but they have R&D team, that is really good. And they also have export licenses, but for now the management is saying that we have enough kind of opportunity in India, that is why we do not export as of now, but in future if we get a good opportunity we can export also. And what is their moat? Okay, the management is saying that they have 25,000 designs as of FY25. So that is their one of the main moat. And another main thing for them is the rapid delivery. If like for say if a company like Kullan, they have some shortfall in any design, Ashapuri can deliver them in a rapid like few days, in 1-2-3 days, because they have stocks also in them, and they sold those stocks, physical stocks, to the companies who need it very urgently. So that is their main moat. Okay, these two are their main moat. So coming to the result part of Q4 FY25, in terms of revenue, they grew 65% year on year. They have registered a revenue of 83 crore. If I see Sky Gold against Ashapuri, Sky Gold grew quarter on quarter. Okay, I mean Sky Gold done I think 1000 crore in Q3, but they done 1050 crore in Q4. But Ashapuri decreased 17% quarter on quarter. So that is for say not a good thing, because for a small player like Ashapuri, they have to capture the market share from other companies. Sky Gold is doing that, but Ashapuri have not able to done that. So that is not a good thing for say, because they are really small, they have to grow faster. Okay, so that is the thing. In FY25 they grew by 92% in terms of revenue. In terms of revenue growth, they are on line with Sky Gold, but again Sky Gold being a bigger player than Ashapuri, Sky Gold grew like 110% in FY25, but Ashapuri grew just 92%. Okay, so that is a thing. In FY25, big corporates contributes 70% of their revenue. So that is the thing, really good thing, that the big corporates are buying jewelry from them, trusting them, So that is the revenue part. And let's talk about the volume. In terms of volume, in FY25 they done a volume of 440 kgs, up by 60% year on year. Okay, so in terms of volume they are doing a good job. Sky Gold also increased their volume by like 50%, if I am not wrong, in this year. Okay, so in terms of volume they have done a fairly good job, but I would expect a better volume growth in coming years from Ashapuri, because they are really small. Okay, so that is why I am saying that. Their guidance is in FY26 they are looking to grow their volume by 50 to 60%. Okay, so if they can do like 70%, 80%, if they can, I'm not saying that they will. Their guidance is 50 to 60%, but if they can do better than that, then it is really good. But if they do not do that, then Sky Gold is a better player if we see. Okay, because if we see the guidance of Sky Gold also, they have given a similar kind of guidance in terms of volume. Okay, in terms of capacity, for now they are using 500 kg per year capacity, and they are, if we see in the FY25 they have done a volume of 440 kgs. So they are likely to utilize their full capacity in next few quarters. So they are saying that in this year FY26 they will increase their capacity by 50%. They will increase their capacity by 50% in next 2-3 months. Okay, and if there is a good order book, if there is good kind of momentum in terms of orders, they can expand towards like 1 ton per year in just 2 to 3 weeks, and they will need just 2 to 3 weeks time to expand towards like 1 ton per year. Okay, so that is the thing with capacity. In terms of margin, if we see in this quarter Q4 FY25 there is some problem with the margin, but I am really surprised that no one in the Concall or the company management also did not mention any kind of like why the margins are low in this quarter kind of thing. So there is no clarity why the margins are very less in this quarter compared to other quarters. Like gross profit margin, they have done a gross profit margin of 8.5%. Year on year they degrew by 400 bps. So there is a really bad kind of margin compression if we see, because it means that in the last quarter, I mean Q4 FY24, their gross margin was around what, 12%, over 12%, but in this quarter that is 8.5%. so there may be some problem in the margin part, but it is not clear that why the margin is low in this quarter. In terms of EBITDA margin also, that got compressed by 600 bps. They have done a EBITDA margin of 1.3%, just 1.3%. Like in the last year, this quarter, they done a EBITDA margin of like 8% EBITDA margin. So that is a really bad kind of a drop if we see in terms of margins. Okay, but the management is saying that they are increasing the high margin products like diamond, like Polki. So the EBITDA margin and all the margin will be better or in the level of FY25. In FY25 they have done a EBITDA margin of 5.1%. Okay, and management is expecting the EBITDA margin to hold in this level because of the introduction of the high margin products like I said that Polki, and diamond products. Okay. In terms of PAT also, PAT degrew by 80% year on year. They have done a PAT of 80 lakhs in this quarter. In terms of margin also, that is a similar kind of thing. The margin compressed in the quarter, but in this year they have done a PAT margin of 3.8% in FY25. Okay, so we have to track that how the margin in the how the margin goes on in the future. That is one of the main thing with this company. But anyway, if we compare it to Sky Gold, in terms of all the parameters, Sky Gold is better, still a better player in this space of B2B manufacturing, B2B gold jewelry manufacturing, because their volume is very big. If we see, Ashapuri do 440 kg per year, but Sky Gold do 450 kg per month. So Ashapuri is 1/12 for say in terms of the volume against Sky Gold. So that is the point. But yeah, we have to keep tracking the companies we have, because no one knows when which company gets better and do better than others. So that is the point. For now, Sky Gold is anyway for any kind of parameters. Sky Gold is a better player against Ashapuri. So that's it for the video. Thanks for watching.